What if I told you there was a company that I invested into over 8 months ago now that is on track to becoming a significant contributor in solving a significant global problem, and since the time I invested has significantly been de-risked? And in response to that, the stock is up about 20% in that time span. While most growth and small cap stocks have really taken a beating, including some of my own stocks, yet you probably never heard of them unless you're in my Discord or perhaps saw my first YouTube video on these guys. What's up everyone, Jay here. Thanks for joining me today. Be sure to hit that like button and subscribe button if you haven't already. It really does help me a lot and it's going to help me bring you more content. So, okay, you done? Good. Now, before we get into it, just a friendly reminder that investing into growth companies is not for everyone. When you invest in growth companies and small caps, you really need to know what your plan is, what your exit strategy is, and you need to be flexible. You need to be malleable. You need to be able to adapt quickly because in this space, things change very quickly. So, for example, let's say you invest in a company with a 2-year time horizon, right? It doesn't necessarily mean that you're tied to that company, right? You're not bound to that investment if what your expectations were are not met, right? If management does not follow through on their promises, for example, maybe it's time to cut the cord. Now that that's out of the way, let's set the stage. So only about 10% of plastic gets recycled, and this problem is growing bigger and bigger worldwide. Governments around the world are now pushing to solve this problem by 2025. There are a handful of publicly traded companies in this space that are trying to do this, but they are all failing when it comes to solving the issue on a global scale. So what are the main issues? 1, they take too much energy. 2, they are not scalable. 3, they only work with certain plastics. Most of them, they can't even process 80% of plastics. So that's kind of not really scalable, right? That doesn't really make sense. 4, they need subsidies from governments. And 5, they use outdated technologies. One of these companies, Cielo Waste Solutions, I'm sure some of you have heard of that company. They also made a big promise, but unfortunately for investors of the company, they were not able to find that success. Now, the combination of very heavy stock promotion, hype driven by the company itself based on a big promise from the company itself drove the market cap to over $1 billion Canadian. Now, it became clear over time that Cielo overpromised and under-delivered. Not something that is uncommon in the world of small caps, and the stock chart tells that exact story. Last December, I made a video analyzing the risk-reward profile of the company that we're going to be taking a look at today. And since that time, like I said before, it's trading about 20% higher today than it was back then. Now, this company is currently pre-revenue. Not something I usually invest in. It's usually something I stay away from, but I'll reiterate, I do have exceptions. And in this video, I'm going to talk about why I'm more bullish than ever on this pre-revenue company and why I did finally invest in the company after months of due diligence and actually understanding why they differentiate from other competitors. So the company is Aduro Clean Tech. And again, if you saw my first video, then you would have known that. And if you were in my Discord, you would have heard me talk about that for the past, 6 months or so. And, this is a company that I've added to. It's become one of my top 5 holdings, stock holdings, that is. And I'm going to go through why. So their solution is really to chemically recycle plastic by using water. And how does that actually work? The idea is to take physical plastic, okay, and break it down into chemical components, which can then be reused for other things like plastic or fuel. Now, Aduro isn't the first to try and do this, and they won't be the last to try and do this. But what differentiates them is the following. Aduro developed a new approach to processing waste plastic called chemolysis. These guys have been at it for 13 years. And in that time, they developed a novel chemical conversion process where waste plastic can be converted from plastic to either gas, liquid, or solids. And you can go check out my first video if you want to learn more about all of this. The link is right somewhere up here. Now, by using Aduro's tech, what are the advantages? Well, you're able to reduce your capital expenditure cost by 75+%. That's huge, that's massive. And you're also able to have a yield of 90%, which is better than any other recycling technology out there. So the economics and the savings are so significant that both Aduro and their clients can both do extremely well. And this is exactly what the governments want around the world, for plastic to be used and reused over and over again in order to limit environmental pollution. Now let's talk about the elephant in the room. On the surface, Aduro looks extremely risky. It's a microcap company making zero revenue, making big promises to solve a major global problem. And, where have we heard that? Let's chat about the risks. Firstly, the tech works and it's been validated by a third party, so that is no longer a real risk. Currently, the company is building 2 sets of pilot plants, R2 for plastic recycling and R2 for heavy oil upgrading, and they are starting the design and engineering for R3 plastics. R2 is a few kilograms or liters per hour, and R3 is 3 to 5 tons per day. R2 for plastic upscaling is expected to be finished in September of this year, while R2 for heavy oil upgrading should be up and running by the end of this year. Meanwhile, R3 for plastics should be up and running by 2023. Aduro is building these pilots with their own money. So after their most recent raise, the company has about $4 million in the bank to deploy to get through these. And the remaining costs of R2 are minimal. And finishing R2 is going to be a game changer. Why? It will unlock a significant amount of operational value because there is a pipeline of potential customers just waiting for Aduro, because these potential customers want Aduro to give them data. And they also want to provide Aduro with feedstock to process and return data to them. So let's turn our attention to the balance sheet, because generally with a pre-revenue company like Aduro, the focus is mainly on the balance sheet. And you want to make sure that the company has enough cash, right? If they don't have enough cash, then they can't achieve their goals. They can't fund their future operations. And they can't do it without continuous, pointless dilution. And dilution is only a good thing when it's for the right reasons and when there's actual growth happening and scalability, or potential scalability, right? So let's check out the balance sheet. 5 months have passed since, so I've added updated numbers in green. Now in Aduro's case, the cost of R3 is going to be between $4.5 to $5.5 million Canadian. Clearly, there is not enough money in the bank to finish R3. Additionally, the company will likely need to spend $1 million to finalize the second lab. So they'll need a total of $7 million to reach stage 3, the semi-commercial stage. That leaves Aduro about $3 million short, but they will only need this $3 million for Q2 of next year, of 2023. And so the good news is that Aduro's management expects to get this from warrants, government grants, and other forms of non-dilutive funding that will minimize their capital needs significantly. What's important to note here is that the company expects to start generating revenue from customer engagements through testing feedstock once their HPU and HBU pilots are up and running. So let's bring this full circle. Remember Cielo? Whereas they overpromised and under-delivered, and they focused on promoting their stock and ended up with a very inflated market cap and promises that they cannot keep, and hence had zero margin of safety, Aduro has done things very differently. They have approached things very, very differently. Sure, they've made a big promise as well, but the difference is it actually has substance, and they have not done any real stock promotion that I've seen, at least, and the market cap is still tiny. Aduro CEO, Ofer Vikas himself, he has stated that if Aduro went bankrupt, if they completely failed, the technology itself could be sold anywhere between like 25 to 50 million US dollars. So if the company went through a licensing assessment and hired McKinsey to do the analysis, for example, the price would likely be around maybe 200 million US, right? And the current market cap is around 45 million Canadian. And the upside, I would say, is around 2, 3, 4 billion, probably more, So again, based on this, Aduro appears to be, again, it's not without risk, so don't misconstrue what I'm saying now, but it seems to be a very, relatively to its peers, a relatively low risk opportunity and a smart bet with a massive upside in regards to being a small cap company. So my opinion. So let's talk about the upside of Aduro and why I personally think it's a smart bet versus a risky proposition. Now, the company has the solution to address the plastic recycling problem, and they just validated that with their third-party validation of their technology. Now, major plastic producers, they're searching for a solution, and they're searching for it like very fast, and they need something quickly. So Aduro is in great position to pounce and is already in conversations with some of them. They don't need government subsidies, right? So they can operate in places competitors just can't. They operate at lower temperatures than traditional technologies, which results in less energy use. They also have a lower operating expenditure and capital expenditure. Aduro's tech works with all types of plastics, not just 10 to 20%. So that's a massive thing. So it works on a small scale, and it's also scalable on a large scale, which is what the world needs. And as opposed to its competitors, Aduro also has that attractive margin of safety we talked about before, as compared to its competitors such as Cielo, for example. So all of this combined really could be setting up for a perfect storm. Now, is it without risk? Absolutely not. Of course it has risks. But again, investing in small caps, like that's what you're going to get, right? You're not going to get a no-brainer investment, because when it becomes a no-brainer investment, the reward is much less, right? So if you want to change your life through investments, you got to do it through small caps or new technologies or disruptors, right? And so this is what I like doing. And sometimes I'll be wrong, especially in the short term. But in the longer term, I'm usually right. And to me, Aduro seems like one of those smart bets that could very much work out in my favor. Now, in terms of the business side, Aduro is going to have options. And as a business, what more can you ask for, right? They can sell their asset when the time is right to a very desperate plastic producer, or they can go the licensing route. They can build their own recycling their own recycling facilities around the world, or they can do a combo of both. So again, they're going to have options, which is exactly where you want to be as a business. So to wrap up this update video on Aduro, in my eyes, the company has been de-risked significantly from last December when I first made that first video. Hence why I built out this position over the last 3, 4, 5 months-ish. And I've made this a top 5 stock holding for myself. Now we're still trading at an extremely low market cap of around 45 million Canadian. There is clear management alignment in terms of insider ownership and performance-based compensation. And so if you want to know more about that issue specifically, I did discuss that in detail in my first video. So go check that out. It'll be linked down below as well. Now, one thing I want to point out is that there are going to be extra shares that are going to be flooding the market on Friday. This is from the PP that was done, about the private placement that was done about 4 months ago. So those will be hitting the market. So there could potentially be some downward selling pressure in the short term. So just know that right away. We did see, we have seen quite a rise from 50 something cents to about 90 cents and then back down a little bit. So, just you always expect the unexpected. It's a very tight float, so it will move quickly, right? So there could be some selling pressure. Just be aware of that. I wouldn't necessarily rush into buying the stock, but again, this is just more so a video presenting the investment idea, sharing my thoughts on it, and sharing the fact that I'm invested in it and it's the top 5 holding. So again, you got to make your own decisions and see if it's right for you. But again, for me, it's an investment. It's not a 2-week or a 2-month swing trade, right? Now, it's difficult to say what kind of revenue we might be seeing in the future for Aduro, and this would be completely dependent on the potential customers and partnerships and what the scalability can look like. But again, with that validation of the technology and strong outside interest, Aduro to me is in a very, very positive position right now. And so very, very excited to watch this company grow in 2022 and 2023. And, I really think this is going to make me a lot of money. Thank you for watching, guys. If you guys have any questions on Aduro or anything like that, please put it down below. If you guys want to see something specific as well for future videos, let me know in the comments. Please like this video, subscribe if you haven't already. Really does help. Thank you. Goodbye.